Welcome back to Gold Rush Reporter, your go-to channel for clear, actionable insights on gold and silver. If you're serious about stacking, trading, or just understanding the metals market, you're in the right place. Hit that subscribe button, drop a comment, and give this video a thumbs up. It really helps us keep bringing you timely updates. Today, we're diving into a topic that's more relevant than ever. Finding real value in silver right now, and why the smartest investors are focusing on physical coins instead of flashy bars or paper promises. Forget about hype. We're talking about practical, historically proven strategies that anyone can follow. Let's start with a fact most people miss. The best silver today isn't a big bar or a modern collectible. It's pre-1965 dimes, quarters, and half dollars. What many call junk silver. Why? Because these coins trade at or just above spot value, without excessive premiums or artificial collector demand. They're liquid, divisible, and easy to use. Exactly what you want in uncertain times. During the pandemic, their premiums were second only to American Eagles because of these exact traits. This leads us to the US Mint, which has historically been a source of inefficiency and sometimes deliberate scarcity. There's a famous interview by Bix Weir with Jack Sermon, the developer of the Silver Eagle program. Jack revealed that he was instructed by then Treasury Secretary Janet Yellen to produce as few Silver Eagles as possible to avoid global disruption, even though distributors demanded millions more. Think about that. Scarcity manufactured at the highest levels, creating a disconnect between supply and demand. Now, let's talk practical buying strategies. In 2026, if you're stacking, focus on coins that are easy to trade and recognizable. That means Silver Eagles, pre-1965 coins, and reputable international coins like the Australian Kangaroo, British Britannia, South African Krugerrand, and Austrian Philharmonic. Avoid overpriced bars from Swiss refiners or inflated collectibles. 1-ounce rounds from local mints are also excellent because they balance cost, liquidity, and storage ease. Why does this matter? Because silver isn't just a commodity anymore, it's becoming a strategic resource. Both the US and China are treating silver as vital for solar panels, EVs, semiconductors, and defense. The metal is essential for energy transfer, and its availability is increasingly subject to geopolitical decisions. China will require government licenses for silver exports starting 2026, and the US may follow by prioritizing domestic supply. This changes the entire market dynamic. Physical silver could suddenly become scarce and extremely valuable. So here's the key takeaway for part 1. Focus on tangible, divisible, historically significant silver at or near spot value. Pre-1965 coins, 1-ounce rounds, and top sovereign coins give you the most security and flexibility. The window to accumulate these efficiently is still open, but it won't last forever. This sets the stage for the next part, where we'll dig deeper into how global policies, supply restrictions, and the paper silver market are creating a perfect storm for a sharp repricing, and why those who prepare now will have a massive advantage when the stampede begins. Continuing from where we left off, let's dig into why silver's current situation is more complex and more critical than most investors realize. Silver isn't just undervalued. It's facing a convergence of geopolitical, industrial, and systemic pressures that could dramatically impact availability and price. First, consider the global supply dynamics. Silver's market cap is tiny compared to gold or even a single large tech stock. That means that even modest buying from major institutions or nations can cause significant price spikes. Unlike gold, which has broad institutional and investor backing, silver's small size makes it extremely sensitive to concentrated demand. That's why every move by a central bank, sovereign fund, or large industrial buyer matters exponentially. The paper-silver market amplifies this effect. Through rehypothecation, the same silver ounce is sold multiple times in paper contracts without actual physical backing. The LBMA, London Bullion Market Association, and COMEX rely heavily on this system. When paper claims exceed actual physical silver, any sudden surge in demand, whether from ETFs, industrial users, or government stockpiling, creates a massive imbalance. Imagine thousands of contracts claiming silver that doesn't physically exist. If nations start hoarding physical silver, the paper market could implode. Next, consider geopolitical developments. China, the world's largest silver refiner, is limiting exports starting in 2026 and requiring government licensing for all silver sales abroad. This effectively treats silver as a strategic national resource. The US is also likely to follow, designating silver as a strategic mineral to secure domestic supply for solar, EV, and semiconductor industries. These moves signal that silver is no longer just an industrial commodity. It's a critical geopolitical asset. What does this mean for individual investors? Simply put, time is of the essence. When countries prioritize their own silver needs, retail availability could vanish almost overnight. Even now, you've likely noticed shortages at local dealers and online sellers. People are starting to understand that silver is far more than a speculative asset. It's a practical, essential resource. So how should you act? Stick with what's proven to hold value: physical, divisible, easily tradable silver. Pre-1965 coins, 1-ounce rounds, and top-tier sovereign coins remain the safest bets. Avoid overpaying for bars or collectible coins with inflated premiums. They're less liquid and vulnerable to market manipulation. Focus on silver that is easy to store, verify, and trade. Remember, we're not just talking about price here. The real value lies in scarcity, strategic importance, and usability. When governments and institutions start stockpiling, the paper market will fail to reflect true supply constraints, causing physical silver prices to surge. The smaller the market, the faster the adjustment, which is why silver will likely lead gold in any sharp repricing. In essence, this is a rare moment in history. The perfect alignment of strategic importance, market inefficiency, and accessible physical supply. Investors who recognize this now and act wisely have the chance to secure significant advantages before the market fully reacts. If you want to stay ahead in the silver market, understanding supply constraints is crucial. Right now, silver isn't just a commodity. It's becoming a strategic resource. Between geopolitical moves, industrial demand, and the looming export restrictions from major producers like China, the supply picture is tightening rapidly. Unlike gold, which has a broader market and more established liquidity, silver's relatively small market cap means even modest buying or hoarding can create significant price swings. Consider industrial demand first. Silver isn't just for coins or investment bars. It's essential in electronics, solar panels, and electric vehicles. Every solar panel installed or EV manufactured consumes silver. And as renewable energy adoption accelerates globally, this demand will only grow. Combine that with the global push for semiconductors and defense applications, and silver's industrial role makes it far more than a simple investment metal. Its unique conductivity and thermal properties ensure it remains irreplaceable, giving it intrinsic long-term value. Tariffs and trade restrictions further complicate the supply picture. Imports from Switzerland and other traditional refiners have slowed due to rising tariffs and regulatory changes. This isn't just a short-term inconvenience, it directly affects availability and premiums. In some cases, 1-ounce rounds from local refineries are currently more practical than imported bars, which have spiked in cost. Sovereign mints like Australia's Kangaroo, the UK's Britannia, South Africa's Krugerrand, and Austria's Philharmonic are now more attractive because their premiums remain reasonable, making them smarter choices for physical accumulation. China's policies highlight the strategic importance of silver, with the government requiring export licenses for silver starting in 2026. They're signaling that silver is a national resource to be safeguarded. The United States has already put silver on its critical mineral list, signaling similar intentions. What this means for investors is clear. Countries will prioritize domestic use, which could reduce international supply drastically. Anyone who doesn't anticipate this is underestimating how government intervention will reshape availability and pricing. Another factor is the paper-silver market, the COMEX and LBMA systems, where rehypothecation and repeated selling of the same ounces obscure real supply. If nations start stockpiling physical silver, while industrial and retail demand remains high, paper contracts may far exceed actual silver available. This could trigger a sudden repricing, with physical silver surging before most investors even recognize the imbalance. Those who hold tangible silver in easily tradable forms, like 1-ounce coins or rounds, will benefit the most. At the retail level, scarcity is already noticeable. Dealers report difficulty sourcing physical silver, and global buyers from Australia, the UK, and Asia are experiencing similar shortages. What's widely overlooked is that even the US relies heavily on imports for almost half of its silver consumption. If these imports slow or stop, domestic supply will be strained and prices will react sharply. This is why physical accumulation now, while premiums are manageable, is critical. In short, silver's small market size, increasing industrial use, and the growing control of national governments make it extremely sensitive to both supply shocks and geopolitical shifts. Investors who recognize these forces early and focus on accessible, high-quality physical silver are positioning themselves for the next major move in the market. Waiting too long could mean paying much higher premiums, or worse, facing a physical shortage. Now let's talk about why silver is not just a market play. It's a strategic asset, and why timing your purchases is more important than ever. Unlike gold, silver's market is small, which means it can react violently to even moderate shifts in demand or supply. When global powers begin stockpiling silver for industrial and strategic purposes, physical scarcity becomes immediate. Large funds, central banks, and wealthy investors already recognize this, quietly amassing tangible silver while the public remains largely unaware. One of the biggest lessons from recent market behavior is that paper silver, COMEX contracts, and LBMA positions does not reflect real availability. Rehypothecation, or the repeated sale of the same ounces, inflates supply on paper, but does nothing to increase the actual metal in vaults. If countries like China impose export restrictions, while the US starts stockpiling, the paper market could implode, triggering a rapid repricing in physical silver. This is not speculation. It's logistics meeting economics, and it's already in motion. For individual investors, the takeaway is simple. Physical silver is king. But not all silver is created equal. Coins like pre-1965 dimes, quarters and half dollars, commonly referred to as junk silver, offer the best value because they trade near spot and are highly divisible, liquid, and universally recognized. Modern silver eagles and other sovereign mint coins are also excellent, but premiums can spike, especially during periods of heightened demand. Avoid overpaying for bars when premiums are unreasonable. Instead, focus on manageable, tradable units that retain value under pressure. Government policies are driving this transformation. The US designating silver as a critical mineral, combined with China's licensing requirements for export starting in 2026, signals that silver is moving from a simple industrial commodity into a strategic asset. These moves create a protective environment where nations ensure they maintain enough silver for domestic energy, electronics, and defense applications. In other words, silver is becoming too important to leave freely trading in global markets. Industrial demand is another catalyst. Silver is essential in electronics, solar panels, and EVs, making it irreplaceable. Copper, often compared to silver, cannot match silver's unique properties for conductivity and heat transfer. As renewable energy projects and EV production expand, this demand will continue to grow, tightening the market further. Investors who ignore industrial demand are missing a critical part of silver's story. At the retail level, scarcity is already evident. Dealers globally are struggling to keep inventory, and many buyers report difficulty sourcing silver coins and rounds. In the US, where large orders are typically fulfilled quickly, the situation is beginning to strain the supply chain. If governments start prioritizing domestic supply or restrict exports further, this scarcity will intensify rapidly, leading to higher premiums and potential shortages. The bottom line is this: silver's combination of small market size, industrial necessity, and growing government intervention makes it uniquely positioned for a dramatic repricing. Those holding physical silver in high quality, easily tradable forms will benefit the most. Delay, and you risk paying far more or missing the opportunity entirely. Looking ahead, the risks and opportunities in silver are becoming clearer. We're entering a period where geopolitical strategy, industrial demand, and market logistics converge to create a perfect storm. The most immediate concern is supply. With China controlling a significant portion of global silver production and now implementing export licensing, availability outside its borders will tighten. At the same time, the US is moving toward designating silver as a critical mineral, signaling its intent to safeguard domestic supply. These moves are not minor. They are deliberate actions that could dramatically reduce global access, especially for industrial users and retail investors. This tightening of supply directly impacts premiums and accessibility. Already, dealers are experiencing inventory issues, and buyers are facing longer wait times or inflated prices for standard coins and rounds. In such an environment, smaller, agile investors have an advantage if they act early. Prioritize tangible silver that is universally recognized. Pre-1965 junk silver, 1-ounce rounds from reliable mints, and sovereign coins like the Krugerrand, Britannia, or Philharmonic. Avoid highly speculative or overpriced items. Simplicity and liquidity will be your edge when the market tightens further. Industrial demand amplifies this effect. Silver is essential in modern technology. Solar panels, electric vehicles, semiconductors, and even defense applications rely on it. Unlike copper, which is often cited as an alternative, silver is unparalleled in conductivity and heat transfer. As renewable energy infrastructure expands and as governments invest in EV and semiconductor supply chains, industrial demand will rise sharply. When supply is constrained, this combination creates the kind of pressure that can trigger rapid price spikes. Another layer is the paper market. COMEX contracts and LBMA positions have long given the illusion of abundant silver, but these are largely rehypothecated. Multiple claims on the same physical metal. Once nations or large funds start demanding actual physical silver, this disconnect will correct violently. Retail buyers who already hold physical silver will be in a strong position. Those relying solely on paper positions may find themselves scrambling in a market where physical ounces are suddenly scarce. Finally, consider the psychological and systemic aspect. As governments treat silver as strategic, public awareness will follow, and panic buying could ensue. History shows that when scarcity and utility collide, premiums can skyrocket within weeks or even days. This is not theory. It's a scenario quietly unfolding now. For anyone invested in silver, understanding these dynamics is crucial. The market is no longer just about short-term price moves. It's about structural shifts that reward foresight and penalize hesitation. The strategy is clear. Accumulate high-quality, divisible silver in forms that retain value, monitor global supply signals, and stay ready for a sudden repricing. The window for easy access won't remain open indefinitely, and those who wait too long risk entering a much more competitive, expensive environment. The forces shaping silver's future are already in motion, and the market is only beginning to respond. Now let's wrap this up with the key takeaways and a look at what it means for anyone serious about silver. The metal is no longer just an investment. It's becoming a strategic resource. From government stockpiling to export restrictions and surging industrial demand, the global landscape is shifting in favor of those who hold physical silver. Accessibility will tighten, premiums will rise, and the small, nimble investor who understands the dynamics will be in the strongest position to benefit. Focus on high-quality, easily tradable silver. Pre-1965 junk coins, 1-ounce rounds from reputable mints, and sovereign coins from trusted sources. Avoid overpaying for exotic products or coins with inflated premiums. Keep your holdings tangible and allocated, not just paper claims. In times of scarcity, these forms of silver will retain their liquidity, usability, and value. Remember, this is about foresight, not speculation. The market moves fast once the broader public catches on, and those unprepared risk missing the opportunity entirely. The broader lesson here is simple. Silver's transformation from a commodity to a strategic asset is underway. The interplay of geopolitics, industrial demand, and constrained supply is creating a rare investment environment. When markets shift, those with foresight, not hype, stand to gain the most. This is a pivotal moment for investors who understand the fundamentals and are willing to act decisively. Thank you for tuning in to this detailed breakdown of silver's evolving role in the global economy. If you found this analysis useful, subscribe to Gold Rush Reporter for more insights, hit the like button, and leave your thoughts in the comments below. We cover gold and silver market updates, investment strategies, and the latest developments affecting precious metals every week. Stay informed, stay ahead, and remember, in a world where uncertainty is the only constant, holding physical precious metals is not just strategy, it's security. Gold Rush Reporter will keep bringing you the clarity and analysis you need to navigate these markets with confidence.